Well, from micro-retirement, that's what I was doing, to sneaky bank tokens. There's a lot to unpack in the world of finance.
Nine's money editor Effie Zahos joins us in the studio now to answer those burning questions of yours.
Effie.
All right, so Effie, Mick has written in. He says, I recently discovered continuous payment authorities, which allows merchants to place a token on your card, meaning they can continue to debit your account even after you've cancelled your card. How does that work?
Yeah, that catches a lot of consumers out because you think, I'm having trouble, you know, cancelling my gym subscription, whatever the case may be. I'll just cancel my card and that way they can't tap it. They can. It depends on the terms and conditions. So you need to check that when you do sign up for continuous payments. If the merchant supports tokenisation, it really comes about to protect you. It's for security. Instead of keeping all your card details on file, they actually have a token. But that does enable them to basically move any reoccurring payments, even if you cancel a card.
Never even seen it. The next question comes from Candice. Qantas Money offers 100,000 points every year for the life of your loan. Just wanted to weigh out whether that's worth applying for.
Yeah, well, points have definitely been in the headline the past couple of weeks because, you know, Qantas not giving as much. And they do have a home loan. They've got a special right now. If your loan's over 500,000, you'll get 200,000 points in the first year, at the end of the first year. You can see here that some of them are quite lucrative. These are all the lenders that do offer home loans with points. The lowest lender there, you'd pay interest over 1 year, 30,000. There's a difference there of about $5,000 more expensive. But, you know, getting 200,000 is quite lucrative, and especially if you use them on flights, they could be worth, you know, around 1 cent. Don't use them on gift cards or anything like that because they get, you know, less in value. But it's basically, are you paying more in interest than the value you're getting on your flights?
Yeah. You've also, Effie, been getting a lot of questions about micro.
Since that story you did for Nine, right?
Yeah.
I did this story for Nine, and it has just gone crazy online. And some of it just slammed me in thinking, this is stupid. Others are saying I'm already doing it.
Yeah, right.
But take a listen. This is what micro-retirement is. These are from ladies in the US.
Retiring that has Gen Z taking small breaks throughout their career instead of a long one at the end.
I am in a micro-retirement right now. I am microdosing retirement as a 30-year-old.
This comes at a time where work is starting
we
to
don't
feel
need to see
less
the rest,
like a
but there
sprint.
is the gist here is that millennials, young Aussies are saying, you know what? I'm going to be working all my life. Why should I, you know, wait until I'm 67 to have a retirement? I'm going to have them as I go along. And a lot of people are up in arms saying, well, isn't that just, you know, there was some guy saying that I do a micro-retirement every weekend. I seem to have one of those. The important thing to watch out here is that if you take, say you're 26, you take a decade off each year until you retire, you're going to lose about 20% of your nest egg, which means you're going to have to work an extra 6 years. But there are actually financial advisors out there that specialise in micro-retirement.
So get the expert help. And do they all get an annoying American accent when they go on micro-retirement?
They all come from America first, don't they?
Thanks, Effie.